Hello and welcome to another update video about ADA. Yeah, we skipped yesterday's video. There wasn't anything to report, so let's take a look at the chart right now, see if anything happened. We start here on the 4-hour chart. You can see that the current assumption is that the market rallied in 5 waves from the 2023 low, from the June low into the March high, topped here at around 80 cents, started a pullback and is now just caught in one of the most boring ranges we've seen in a long time. I think last time it was that boring. I'd say, let me know when you think that was the case, but for me, the last time it was here between August last year and October last year. I remember that. Actually, I was on holiday at the time, but it wasn't nothing. I was still doing videos, by the way. But that was boring. This is now pretty much similar, and especially now most recently here the last week or so, that was one of the tightest ranges I've seen in a while. So the main support area is still defined between 49 cents and 29 cents, and the idea is after a 5-wave advance in wave 1 we can watch for a wave 2 pullback, and this wave 2 pullback is likely still unfolding. Yeah, I mean, we might have bottomed. We talked about that. That would be the orange count, but it's a bit of a hopium count until we see a little bit more action, a little bit more evidence. See, the wave 2 could have bottomed here on the 13th of April, but it just need a little bit of upside momentum, something that tells me that, yeah, some kind of a low is in place or anything. I need at least here a little bit of an upside breakout, a little bit of upside momentum from this area. Particularly would be nice to get a break above the 52 cent level, or initially at least 51. That's this swing high from the 21st of May. That would be at least helpful because it would, let's say, rule out the Elliott wave triangle as it is right now, because in the white count, we're basically in the process of confirming or completing an Elliott wave pattern, an Elliott wave triangle pattern. And this triangle could, from here, break out to the downside. Okay, so this is the white count where we say, okay, the low was in a 3rd wave within wave C of this larger wave 2 correction that started in March. And after an E wave, such a triangle would normally complete and break out to the opposite side of the E wave. So A, B, C, D, and E. And yeah, absolutely, from here we could now break down, no problem. That would be very common. But I've mentioned many times that these triangles, they have really become unreliable, especially in the current cycle. So I don't trust the triangle count at all. And also a triangle would need a confirmed breakout. So I need a break below that 41.9 cent level, which is the 1st of May low. That would quite well actually confirm that we're heading to the downside here. Yeah, but for now we are in the range. In the range, we're actually holding above a micro support area. So we've got the overall support area here between 29 cents and 49. And within the upper section of that support area, I have added another micro support area from which the orange C wave to the upside could be starting. That's don't mistake this or confuse this with a good setup. It's not. It is speculative until the market gives us a signal, and that's, this is not like it's not a 1-2 setup here or anything. If had we seen nice 5 waves up, a 3-wave pullback into a support area, the correct context and everything, then well, it would be a nice setup. But it's at best an A wave, so it's questionable. It might be an A wave in wave 3, but then ideally we would start the C wave now, and that would normally be an impulse, but there's nothing there. Okay, so we can talk about that. It's just not much going on. So we have the range defined. I'm just gonna move this line to the right here. We've got these range lines. This is something for range traders at the moment. Not very exciting. If we get another low, price should head to 36 to 38 cents. And 36 particularly gives us Fibonacci confluence between 2 levels. Yeah, and to the upside, the price to confirm further that we've actually bottomed already here on the 13th of April. I need to see a break to the upside above 52 cents to 60 next, and then the 5th wave should get to 65. Main takeaway, I think, is that we are still in the range. Okay, we talked about the breakout points, 41.9 cents to the downside, 52.2 to the upside. One more low or not, as long as we're holding 29 cents, which is the lower boundary of that main support area, I'm going to look for higher prices overall. That's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.